Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. Okay, so accountants are insanely valuable and versatile professionals. So much so that it's actually really confusing what the hell an accountant's job is and what it isn't. And it can feel like the accountant is the Swiss Army knife to any business solution. And what I want to do is clarify a couple of things. And I have a pretty strong opinion about this. And this is, by the way, this whole episode is based on my opinion. So take it for what it's worth. But I believe that accountants should be doing certain things for business owners and should not be doing certain other things. And this is actually part of what we kind of preach in our practice. So when we're looking at the scope of work for a client, there are certain things that we just won't touch. I want you to think about the genie from Aladdin. Remember how he said, like, you can't make someone fall in love with you, you can't make someone die or bring them back from the dead, and then you can't wish for more wishes. So what we do is we say there are just some things we will not do for a client, no matter what they pay us and no matter how much we love them. And I'm going to tell you what those things are. And I'm going to tell you why it's probably a good idea that that's our policy, and why I want you to rethink, if your accountant's doing these things for you, what the impact could be to you. Because ultimately, these things that are deal breakers for us that we won't do are not for our best interests. I mean, there's definitely a side effect of us not wanting to do these things for you, to be honest with you. But there's a primary reason, which is that we shouldn't be the ones doing this. And I want to introduce some of these concepts to you. So number one, accountants should not be, if you're hiring an accountant externally, and let me clarify, if you're hiring an accountant externally, you're hiring them to do your taxes, do tax strategy, be like a fractional CFO, manage your financial reporting, things like that, right? This could also be your bookkeeper. I'm also including bookkeepers in kind of this broad category of accountants, by the way. But I don't think they should be managing your business's cash, okay? I know. Some of you are thinking, wait, what? What do you mean? I mean, there's this concept. There's this concept that we all live by in the accounting profession, which is called conflict of interest. And I want you to understand what this does to trigger that. So if we are the ones holding the checkbook, I'm aging myself, but if we're the ones holding the access to your bank account, if we're the ones who are able to move money on your behalf and make transactions, especially if you are absent and not looking at this, that is insanely dangerous. That is insanely dangerous. And yes, most of us are very, very trustworthy. And I believe your person is very trustworthy as well. However, here's the thing. Number one is no one will care as much about your money or your business as you do. So the level of attention to detail will be different than what it is with you. The other thing is, when we talk about conflict of interest, if I, as your accountant, as your professional, have access to make payments or to collect money from your bank account myself, like if I have access to transact on your behalf and I have access to the record books, that is a no-no. That's the conflict of interest. Why? Because that is the ultimate recipe for embezzlement. This is how Dane Cook's brother embezzled so much money. This is how Steve Harvey got taken. This is how every story you've heard about how the accountant was corrupt and did all these things. This is how it happened, because this is the gateway. This is leaving the front door open and saying, take what you want. Because what ends up happening is the bookkeeper can write themselves a check or write a check to whomever. They could pay their cable bill. They could pay their mortgage using your money. And then they can call it whatever they want in the books. Advertising expense, coaching expense, whatever. They can bury that. And that is why you need to be paying attention to your numbers. And I'm not saying that your person is doing this. In fact, I hope the vast minority of people are even worried about this type of thing. But I'm telling you that Even though you don't think you're going to get robbed that day, you still lock the door. Even though you don't think you're going to get into a car accident, you still have insurance. Even though you don't think things are going to happen, you still protect yourself. And this is one of those forms of self-protection, is making sure the person who has access to the checkbook does not have access to the record book as well. The other thing is, along the lines of this managing your cash concept, the other thing that I will not do for a client, which actually a lot of accountants do, is I will not collect your refund or pay your taxes for you if we do your tax return. So it's an interesting concept. There are people who have these bank products. There are firms who will say they'll give you a refund advance and then collect your refund and then do all these fancy tricks to get it to you. I don't personally like that, and I will never offer that because there is a lot of risk in that. Number one to us, number one to, or number two to you. And I won't pay my clients taxes because that crosses the line into their personal bank accounts. And again, that goes back to number one. I don't want to manage your cash. I don't want to have custody of your cash. And I don't want to mess something up and then be at fault for that if I move a digit or type it in slightly incorrectly or anything should happen. I just don't want to be, liable for that. And also, I don't want to be a gatekeeper for your money. I don't want it to have to flow through me to get to you. I'm not the custodian. I think of the Britney Spears case with her father, and I go, I'm not Jamie Spears. I'm not here to, hold your money and to discipline you or anything. You are a perfectly capable and mature business owner who can manage their money. So I will not do that with my clients. I won't collect the refund or pay their taxes for them. I can absolutely show you how to do that, but I need my clients to be able to do that on their own because this is a key thing you're going to have to do every year as long as you live. If you don't know how to pay your taxes, then this is something you need to learn. It's absolutely necessary. You can't rely on other people to do it for you forever. And also, if people realize that you're relying on them to do it, here we go again. This was the Steve Harvey case where he would give the accountant the check, and I believe it was somewhere to the tune of 20 million. Now, don't quote me on that, but I remember seeing a video of Steve talking about this where his accountant was cashing the check because he would write it to the accountant and the accountant would pay it for him. No, 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 no. Never do that. Please, please, please never do that. And what happens is the accountant was cashing the checks for himself, and Steve got a letter like the IRS saying, hey, you owe like $20 million in taxes you never paid us. And he's like, what are you talking about? I gave it to the accountant. And then they realized the accountant was just pocketing it. And again, this is the recipe for a potential crime if you don't have that level of trust with your accountant. And again, most of us are ethical, completely legitimate and fair and trustworthy people. But again, you got to protect yourself. For my fellow tax and accounting professionals out there, we are in the thick of another tax season and still recovering from the last few years. By now, you're probably considering making the switch to offering advisory and fractional CFO services and saying adios to transactional tax prep work. A couple years ago, I knew I was done with busy seasons and late nights, but I didn't know how to get out of the pattern or get clients to want these new services. Enter the CFO Accelerator and my mentor, Michael King. I'm so excited to share that Michael and his team are hosting the CFO Accelerator Live in Dallas, Texas, May 16th through 18th. Join me and a community of other fractional CFOs to learn the 7-step framework that Michael and his team implemented to grow to 7 figures in revenue. You'll leave the CFO Accelerator Live with an entirely new set of game-changing tools that are going to give you the confidence in how you set up your services, drastically reduce the amount of time and frustration needed to grow your firm, and maximize the impact that you can have with your client. Click on the link in the show notes to snag a ticket at a special price exclusively for Keep What You Earn listeners. I will see you there. The last thing that we won't do that I think accountants should not really get involved in if they're hired as an external party is approve payroll. This is especially true for clients of ours who have some type of hourly pay structure or commissions and things like that. I don't believe that we can cast the judgment as an impartial third party as to whether, and this goes for contractors too, by the way, as to whether your contractors fulfill their obligations and are ready for payment. I don't believe I can cast judgment over whether your employees charge the right number of hours based on their output. I'm not close enough in the business to monitor the employees' output and their deliverables to understand whether what they're charging you is fair. And I think there has to be intervention from the business owner when it comes to approving payroll, commissions, and other types of payments. Because when it comes to the financial oversight of the business and the overall strategy, we can help with that. But when it comes to the day to day, did Susie complete her work assignments enough to actually bill us and to actually get paid in full using those milestone payments we set up with her? I don't know the answer to that question. All I'm going to do is see the request for payment, see if we have enough money in the account and probably pay it, because I have nothing stopping me from doing that if I'm just a third party contractor. So those types of things that really rely on the business owner's judgment are crucial for the business owner to own, or to have some type of financial operations manager in place to be able to do that for you. I cannot stress enough the importance of having some type of internal financial operations in addition to a high level external strategist. That is the recipe for greatness when it comes to your business, because you need to have somebody who's in the weeds, knows the contractors, deals with them on a day to day basis, knows the employees, can approve payroll. And to be honest with you, that's you as the founder for a really good amount of the lifetime of your business. You're still going to be in that role for a while until you can have someone come in and really own that. But until you have that role, assigned to someone internally for financial operations, and this could be your COO, this could be your operations manager who also happens to do these types of approvals, that's fine. But until you have that role covered, you're going to be kind of in that hot seat, having to make those decisions. You cannot outsource, in my opinion, to a third party these types of decisions and judgments. It's just not going to bode well, because they're not really going to be reviewing for content. They're just going to be doing the surface level work. So those are kind of the three things that I would say you should not hire an external accountant to do for you. Or if you think that these things are in scope, or even if they are in scope with your current provider, I would question whether that is an effective scope or an effective service model where, are you involved? Are you staying involved? Are you at risk right now because your accountant's doing one of these things? Give that a good hard look. And if you're wondering what to do if this is happening and you're worried about talking to your professional about the risks, shoot me a message. Let me know. I'd be happy to help you navigate that. Let us know in the community on Circle if you have any questions on today's episode. You can check out the link in the show notes for a link to join our community and join our monthly Q&A calls. I would love to see you on there and chat more about this and other topics we cover on the show. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.